Hey everyone, time for the market review and uh, considering my expectation moving forward and how I think things will play out, I won't do a weekend update this week. This is probably going to be it, and I don't expect much change going into the weekend. So one of the strangest days I've seen in the market in quite a long time. Yesterday, everything was green except software and energy, basically. There were a lot of fades intraday, but in spite of all the fading we saw, like for example, I don't know, Palantir, 10% fade, opened up like 3%, went to 4, and then faded 10%. And there were a lot like this, not necessarily 10%, but there were a lot of fades. But in spite of all the fades, the market closed at near highs yesterday. Very strange. From a breadth perspective, it was only 74.5 UVol, which is considering how much we went up percentage-wise, it's quite unfathomable. I don't know. Very surprising that we only went up 74.5. We didn't even do 80 UVol on all this bullishness, like 3% up days on Qs and IWM, almost on DI as well, spiked 2.55. Very, very strange setup. And with the breadth indicators we're going into the oversold area, if we continue going up a bit more, I think we'll hit the rest zone like we did for other bear market rallies, like for example, here, 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 and so on. My positioning breadth also went positive as well. Uh, we'll see how it plays out. From flow, there was a lot of call profit taking yesterday, and I mean a lot. Like I don't think I've ever seen activity like this before. Um on and I don't mean like call selling from we got to this point and people sold calls above. No, I mean there were profit takes on activity on calls bought around this area, and yesterday there was a lot of profit taking on many names with calls. So bit awkward and strange. I'll turn off some stuff and then turn them back on to showcase. First of all, we pushed above all major moving averages on this. These are EMAs on the ribbon. Then we have 200 MA in orange here, uh, 50 in blue here, and we closed above them all. We didn't quite turn the 100 MA, but kind of doesn't matter that much. And now it's a bit awkward. Like I felt a lot more confident about what's going to happen when we had this inverted head and shoulder setup. We had a potential breakout here, and it looked bullish, and it turned out to be the case. But now it's a very awkward spot, and I don't really know how to treat it. So first of all, let's take the things that I'm tracking and look at them individually. Then we have the yearly ATRs. We have the yearly open and 68.47 very high, close above, which it's very likely to become a resistance area with potential for a bit of an overshoot. We have the JPM color for um, June, that for Q2, that is 68.40, which is basically confluent with this one, also likely to become resistance. The head and shoulders target, I'll turn this off for now. Turn this off for now. The head and shoulders target is basically 6900. Something like this, so 6900-ish approximately. Then we have the Q2 ATRs, so the same ATRs as the yearly, but for the second quarter. We flipped the long trigger, we flipped the golden gate. Flipping the golden gate gives hitting the golden fib level like an 80% plus probability within the interval, and this is likely to happen sooner rather than later. So my expectation is with the inverted head and shoulders, with everything else, basically a move up to 6900, but over the next couple of days, not necessarily today. Today, I kind of expect we could do a pullback. It's going to be an inside day on the daily. Basically, we will close within the bounds of this candle. We won't go higher, won't go lower than this candle. We also have like a channel suggesting this. Oh, not this one, this one. So something like this. And I'll switch this to the daily ribbon. So we're kind of overextended. We had like a major trust above. The real world situation is not really good. Like we're getting further escalation. We had the UAE bomb Iran yesterday. We had Israel bomb Lebanon yesterday. Fewer ships went through the Strait of Hormuz than before the ceasefire. So very, very strange and unusual setup. And my expectation is that we will get like a move back into the ribbon or at the ribbon, turn it into support, turn the long trigger on the quarterly into support, and then we get a final move to hit the golden fib level and then go sideways a bit, and then everything points to this being a bear market rally still. We didn't get enough momentum and breadth to turn this into a potential or make the probability of this being a bull market leg higher than this being a bear market leg, in my opinion. This is all subjective and the way I interpret it. So I can be very wrong on this one, but this is how I think things play out in the short term. Obviously, it's a headline-based market, so again, anything that comes up that will potentially derail the situation can push us down even more. We are sufficiently rallied to for this to be the end of the bear market rally, like almost 8%. If we go the full 6,900, it would be like 9%. Let's put it here. So 9% rally, again, more than enough to be considered a full bear market rally, even the way it is here. But I still think we have a bit more in us, and we will be turning this into support, do another leg up, and then go sideways for a couple of days before the next leg down. Now, when the next leg down comes, almost certainly we will retest the lows. I'm gonna turn the JPM color again, and low retest with a bit of a leeway of going to 6150. So one scenario would be I'm just gonna draw it straight down. It's not gonna be straight down, but just for the sake of argument, I'm gonna draw it like this. So one support will be here, another support will be here, and we could do like a bullish divergence on this one, like new low, but the daily oscillator on this one would make would I'm gonna do something like so say the daily oscillator here is something like this. We go back up and we do this. So we have a bullish divergence when we hit it like this. This would be a bottom signal and we would go up. If this doesn't hold, we go probably to 69.50 and that's likely going to be a short-term bottom as well. Don't know if it's going to be the full bottom. We could do something like this and do another leg down and go even lower. Don't know right now. It's hard to evaluate at this moment. But main expectation is pull back to the long trigger, which is 6660 basically. Then go to 6900 and then go sideways for a bit before eventually starting a new leg down. That would be at a minimum a low retest, and this will play out probably next week or at most in the week after OPEX. So that's kind of it. That is my expectation. Again, I don't feel strongly about anything. Like we could potentially even do uh, go all the way to the quarterly open and still be bullish. I go here and then still go for the move to 6900. So it's I don't have a lot of certainty about how things will actually behave. The levels of interest are the ones you see here. So first 6600, 6500, and then 6900. And I think we will be swinging in this area for the next couple of days at least, before eventually going to the full bear market rally target at 6900. Okay, that's it for now. Have a good one. Bye bye.